Oh boy, Netflix sure stole the spotlight today, folks. This streaming giant couldn't stop making headlines, so let's dive right in. First up, Netflix had investors all mixed up this morning. The company's stellar quarterly earnings report showed a few numbers that got everyone excited. The streaming behemoth beat Wall Street's expectations with earnings of $4.88 per share on revenues of $9.56 billion. But here's the kicker. The real superstar stat was the 8.05 million new subscribers, nearly double what analysts had predicted. Netflix's new ad-supported plan is a big hit, accounting for about half of these new signups. But wait, the morning celebration fizzled out by noon, with the stock eventually dipping 1.51% by the close. Turns out, the guidance for the next quarter wasn't as big a blockbuster. They forecast revenues a bit shy of consensus and hinted at slower growth. Tough crowd. Next on the streaming stage, Roku might have found its silver bullet thanks to Netflix and Comcast. Peacock's price bump this week made the ad-supported plans more enticing. Plus, Netflix scrapped its $11.99 basic tier in favor of pushing their cheaper ad-supported plan. All this is music to Roku's ears, which thrives on ad revenue. Basically, price hikes and shifting strategies from Peacock and Netflix might steer more eyeballs and ad dollars Roku's way. Caught that plot twist? Following that, Netflix's co-CEO Ted Sarandos chatted during the earnings call about how Netflix and YouTube together rule the US streaming airwaves, making up around 50% of all TV streaming time. It feels like a frenemies situation here. They compete, but they also benefit from one another. For instance, Netflix uses YouTube to showcase trailers and behind-the-scenes content, driving audiences back to its main platform. Then there's that intriguing new release, Mission Cross, an action comedy dropping on August 9th. This movie features a house husband with a secret past teaming up with his high-ranking officer wife. It's got explosions, espionage, and heartwarming moments. Classic Netflix, blending genres like nobody's business, aiming to keep us all glued to our screens. Meanwhile, investors had mixed feelings despite the epic quarter. Some analysts pointed to double-digit revenue growth and whooping 27% operating margins as clear signs of strength. They're also eyeing the potential for even more ad revenue and live content as big revenue boosters. What's next for Netflix? They continue to wrangle with heavyweights Amazon, Disney, and even Apple, all determined to eat Netflix's lunch. But with strategic bets on password-sharing crackdowns, ad-supported subscriptions, and diverse international content, Netflix seems to have a rock-solid plan. So there you have it. Netflix was all over the news for robust financials, savvy strategic moves, fresh content, and a thrilling game of continuous adaptation. It's a plot worthy of any of their own thrillers. Keep tuning in. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.